From Kansas State University, this is Agriculture Today. Eric Atkinson with you, and coming up today out of the Livestock Marketing Information Center, Katelyn McCullock on the cattle markets. She'll remark on last week's improvement in fed cattle prices, the ongoing downturn in boxed beef prices, and the potential impacts of overall food price inflation on beef consumption moving through the summer. Also today, K-State's Jaymelynn Farney visits with Warren Rusche of South Dakota State University as they'll discuss the merits of early weaning spring-born beef calves. Warren maintaining that there are advantages to this strategy that go beyond merely early weaning because of drought concerns. And Jeff Wichman is standing by with this week's 4-H feature. That and more ahead on this Agriculture Today. You are tuned in to the K-State Radio Network and Agriculture Today. Thanks for joining us once more on a Monday. And the cattle markets are our first order of business, as we're visiting once again with the director of the Livestock Marketing Information Center based out in Denver. Katelyn McCullock sharing some thoughts on these excitable trades. Katelyn, we look at this past trading week and it's a little bit unnerving sometimes to watch just how reactive these markets are.
So the futures market had some pretty strong reactions to the weather that's happening on the crop side of things. We saw corn come down pretty progressively from when they started talking about the potential for a tropical storm to develop and into this following week. Now, the feeder cattle market reacted very strongly, moving close to about $10 a hundredweight in about a period of a week and a half. The fed cattle market has actually come up a little bit on the futures board Friday, a little bit of weakness, and some of that's probably related to the boxed beef trade. But on the cash front, prices haven't reacted nearly as much as the futures market. For many of the cash markets across the U.S., you're still holding well above $7 a hundredweight. And what we're seeing is the basis move around quite a bit because similarly, feeder cattle prices haven't quite moved that much. Now, looking across Dodge City auctions, the 7 to 8 weights over the last several weeks have been fairly stable, hovering around that 140 per hundredweight price level. We did see a little bit of a pop this week in the 750 to 800 pound category, but I don't know if that's going to continue. I think the feeder cattle market on the cash side is really waiting for some more concrete crop information, and it'll probably need that June acreage to give it some direction, as well as a continuation of weather patterns, whether that's dry or more rain forecasted. I think they're still going to be looking towards that feed market for the majority of the growing season. Now, the fed cattle market has some other things at play, such as beef demand. We have exports have been really strong in the last month, and that's still weighing on to some of those factors that are a little less tangible, that aren't easily measured, that people like myself are trying to grapple with and look at all the indications of how this economy in the world is coming back online and what is their appetite for beef, for U.S. beef specifically. The cutout has had an incredible rally and now seems like it might have topped out. It's probably declined over the last week. So week over week, last week ended only about 3% lower, but in contrast, we were seeing steady day over day gains in the cutout value up until this point. And now we've seen steady day over day drops in that cutout value. And so seasonally, we would expect boxed beef to decline after 4th of July buying has happened into that Labor Day pattern. So that would be seasonally normal. But keep in mind, the cutout is still well over $300 a hundredweight. So that's still a very good price from a historical perspective. And even if it drops, it is somewhere close to $100, that would still be a rather normal price. And so there's a lot of space, I would say, in that boxed beef cutout right now, so that even if we do see a fairly strong decline here, you'll still be looking at fairly good beef demand.
When we think about these markets and noting, as you've suggested here, that the cattle markets have been reactionary when they see what's going on in the grains, any way that the cattle market can separate itself from that volatility that seems to be well instituted in the grain markets right now, Katelyn?
I don't think the feeder cattle market can get away from it. It's just we have a situation where there's a couple of factors weighing in here. For one thing, you have a smaller calf crop, and you have that against a backdrop of potentially stronger demand, beef demand moving forward, which is going to help support the whole supply chain, hopefully, through the next few years. But that tightening cattle supply, the downward trend in the cattle cycle, that should help keep feeder cattle prices elevated. The concern, I guess we would say, is that you're looking at a drought monitor that is the worst since probably 2012 or 13, that is looking worse and worse across the Midwest. Now we'll see how much this rain helped at the end of last week, but it's still probably a little too early to tell right now. All those things are probably supportive of feeder cattle prices as opposed to pressuring them. And so even though there's a lot going on, we're still thinking that feeder cattle prices will probably be above a year ago this fall.
You mentioned the drought, and reports have been coming in frequently, substantial herd culling taking place in the northern plains. When you look at that and how that's going to likely influence the flow of cattle or beef into the marketplace, what are your thoughts on the repercussions of that as it's likely to continue?
So total beef cow slaughter year to date is up about 10% from last year. And regionally, that's varied a little bit depending on where some of those pressure points are. We're hearing a lot about cows moving to market, about pairs moving to market because these pastures just can't support the stocking densities that they normally can, and hay is very, very expensive. We have done a few things to react to that. So for one thing, LMIC has revised their forecast. We now have production above a year ago, and that's because of that higher female slaughter, both on the heifer side, it's a little bit stronger than we thought, as well as on the beef cow side. But what that means ultimately is that you're going to have a smaller January 1 number than maybe we were initially thinking. And it's very, very early to project right now. But if this continues, you could easily see something above a 1% decline on January 1. But it's only June, and we need the July 1 inventory numbers first. But ultimately, we aren't hearing a lot about producers retaining heifers or trying to build up their herds in a matter of increasing. And so what that means is that you'll have smaller cattle supplies in the next 2 to 3 years still, which overall is going to support those live cattle prices.
Back on the demand side, something that you're watching in a broader context, the inflationary tendencies in food prices right now, beef and beyond, and how much of a concern that will be for the beef production sector. Where are we on that, and where are we headed, do you think, Katelyn?
Well, Eric, that's an interesting question. I think I've paid attention to more different markets than I do in the past based on this inflationary pressure. Usually you see some of the metals react. There's been a lot of conversation in the trade publications about the lumber market, and watching that have a huge ride up and then largely crash back down in a very short period of time. But all of these different markets are trying to grapple with, is this really, can this all be attributed to pent-up demand? Are we seeing some inflation based on some of the stimulus that the government has done that is generating just this excess price rally that we're seeing? And one of the things we watch is food price indexes. So the consumer price index is one of those more standard economic measures of inflation. We like to boil it down to more specifically food at home and food away from home. And that was something we watched during the pandemic to see kind of where people were spending money. And now that everything's reopened, it's been interesting to watch, have those dynamics change. Are people spending less food at home in favor of away from home consumption? And what we found in May was that food away from home gained about 3.6% or more, and that's been pretty consistent across the January through April data, and May was actually one of the highest, so it was up 4%. So pretty large year over year increase. And the food consumed at home, that index value actually didn't retreat either. And so you have this kind of unique dynamic in that both measures showed a year-over-year increase. And some of that has been because of this price increase. Now, if we look at the all fresh beef price, which is kind of an aggregate look of what's being sold at the retail level, the all fresh beef price hit the highest level in 10 months at $6.73 a pound in May. That's a USDA ERS published number. And if we think about historically, that's a very high price. So there's only 3 months in the entire data set back to 1987 that were higher than that value, and all 3 of them were last year. So we're still looking at very high retail beef prices.
So then is beef still, that all said, relatively well positioned within this inflationary / demand situation we see right now?
Well, economic theory would suggest that as prices rise, we're going to demand less. And so where that stopping point is, where consumers generally just are no longer buying beef, is probably not quite here yet, but you might see some substitution away. The other thing is pork and chicken are very well positioned in some respects. We have plenty of meat available. The pork cutout has rallied just like the beef cutout, but over this summer period, beef may find that consumers aren't quite as willing to spend as high of prices as they were, especially if we find that the economy isn't just going as gangbusters as we thought. And so what I would say is even if it's not happening right now today, the further that price escalates, the more you're going to have consumers stop and maybe think about that purchase price.
Katelyn, we appreciate your observations. Many thanks to you. We'll talk again soon.
Thank you.
She is the director of the Livestock Marketing Information Center, which is sponsored by K-State and numerous other land-grant universities. That's Katelyn McCullock, allowing her thoughts on the cattle market trends on this Agriculture Today. Welcome back. You're listening to Agriculture Today. Well, the idea of early weaning spring-born beef calves has been taken up by an increasing number of cow-calf producers in recent years. Often that's prompted by summer drought and the resulting low forage availability that compels the producer to take the nutritional pressure off of their cows by weaning early. But this approach doesn't always need to be associated with drought. Last week, an extension beef cattle specialist from South Dakota State University, Warren Rusche, talked with K-State Beef Systems Specialist Jaymelynn Farney on her weekly podcast about early weaning management. He is very much a proponent of this tactic.
Warren, what are some of those advantages, especially from the cow management side, that early weaning entails?
Well, I think from a cow management standpoint, in my opinion, the biggest advantage, the biggest reason we want to at least take a look and at least consider early weaning is what it does from a standpoint of feed and nutrient requirements for the cow herd. If we take a cow and wean her off, shut off lactation sometime in mid-gestation, her nutrient requirements are cut considerably, which can be critically important if we're thinking about how do we optimize, how do we minimize inputs and optimize outputs and from a whole system standpoint. As we were speaking offline, my background is I've got some production ag background. I was part of our family's operation for a dozen years in eastern South Dakota. And I always viewed that the ability to turn cows in our system out onto corn stalks in October, November, without a calf at side was really a key strategic advantage for us because I could add body condition to that cow to set her up for the April-May calving season that we operate in without spending much money at all. All it really took was a little bit of hot wire. Sometimes I had to haul some water, and maybe we spent a little time on horses and four-wheelers moving cows from one corn stalk field to another. But in terms of cash expenses, it was almost zero. So we looked in our operation as that is kind of a key way to help us control cow costs. Let us run more livestock on a given unit of land by using some really kind of free resources. Plus, then it also let us take advantage of, we tried to invest in some quality genetics, at least from a growth potential standpoint. We could direct those feed resources to the calves at a point in their growth curve when they're incredibly efficient. With the kind of genetics that we have, we don't necessarily have to ask that cow to raise that calf to 6, 7, 8 months of age in order to capture growth. And in some cases, maybe bringing that calf off at 5 months when he weighs 450, 475 might be, from a system standpoint, a better way to really kind of optimize inputs and take advantage of the growth genetics and efficiencies that are available to us.
When you were describing that, I immediately thought of economies of scale. That could be something that, can help. If you can reduce the amount of forage input into your cows, you can run more cows on that same acreage.
That's right. Because she, all of a sudden, her grass demand goes way down. Even in our system, it was crop residues. In other places, it may be something else. Even if we don't have that resource, we're stretching what we do have farther. So from a drought standpoint, I mean, to me, this is one of the first places to look at from a drought management. But I'd even look at it as is at least a potential idea, as a kind of a standard practice to think about when is it we want to wean. I think sometimes we get trapped in these kind of mental models that, because we adjust weaning weights to 205 days, that, about 7 months should be how long we expect that calf to stay at the cow's side. And in some systems, that's perfectly appropriate and is the right decision to make. But let's just make sure we're making it because that's the right decision for us, rather than because we saw it in some book somewhere that we have to run a calf that long.
And there, like I said, those efficiencies on those weaned calves are really good, especially if you get them in the right growth curve.
It's right. We can have feed to gain, in the 4s. They're just, they're incredibly efficient. And I'm speaking, this is my personal experience, and maybe not everyone would necessarily agree, but I'm not as convinced there's big of a health risk as we sometimes fear they will be. Our experience has been those calves started on feed really well. As long as they have some, we got to manage, husbandry plays a huge role, and things like, some good quality grass hay or some things that will get calves to the bunk, making sure they have access to water and know what water is. But if we can start checking some of those boxes, they really start awfully easily. And, those early wean calves, they just started on feed really nice for us.
Yeah, and so we've talked kind of about both the cow side and some of the advantages on the calf side. But, we really wanted to focus on the economics of early weaning on this topic. So what are some economics? And you can talk both the positive and the negative, or just in general, what is the economics of early weaning?
Well, I think the first part of that question on economics, we need to think about how are we going to market these calves and how are we going to turn them into cash. If we don't have some opportunity to, in my opinion, if we early wean these calves, to optimize the economics of doing that, we need to be prepared to feed those calves for 45 plus days in order to, get them over that stress of weaning. And we can talk about, there's some ways we can minimize that stress, but it certainly is real. We got to get those calves started. There's some labor demands. So we need to be able to own some of those calves long enough to take advantage of that. If we don't have those in place, and our plan is, we need to market calves either right off the cow or shortly thereafter, this system might not really fit all that well, because what we're doing is we're sacrificing dollars on the sales side, and depending on the scenario, we probably aren't capturing enough of those savings and feed costs on the cow. So I think the marketing and post-weaning part of this really fits into the economics. The other part on the economics, in my opinion, is what feed resources do we have to go into that calf? As we kind of alluded to right now, feed costs are pretty high. If we don't have some economical either forage or home raised feed resources, we need to push the pencil a lot harder than on early wean calves, frankly. Flip side, as we talked a little bit about offline, cover crops have been much more widely adopted. In my opinion, that could be it's an overlooked feed resource for this class of livestock. Those calves could go off onto some high quality cover crops where some other part of the enterprise is paying most of the land charges. They're fairly low cost feeds, and if we manage the forage quality well enough, we should really get some pretty good gains on those. And so in that scenario, I think the early wean system really could work out really well. But to kind of circle the loop again, I think though the economics really depend. It's that intersection of what's your marketing plan and what's your plan on how to feed those calves once you do wean them. And then the second look is, well, what is our potential for feed savings on the cow herd? And all of those things in combination are really going to start telling us what our, the economics might be. The other part we hadn't considered is some discussion of what do we have, what's available for us for facilities, and what do we need, and also labor issues. There are some, in some operations where, maybe the cow herd is a sideline enterprise, and labor might be a challenge. That's something that's got to be figured into it. And I think those considerations and those limitations are real, and we do need to factor those in.
One thing that we were thinking about, and I really am glad you brought up come up with your marketing plan, because that is one thing. Most of our cattle producers here in Kansas calve anywhere between February through March, and some April. Some folks are moving back a little bit. We're a little earlier calving than your example in South Dakota. Well, that 205 days gets us into October, and when is the lowest calf market?
It's October, and so that early weaning, and that's a case where some discussion with the people that are helping market your calves, what your marketing plan is, might be really important. We may be able to shift those a little bit to miss that low, or we can own them a little longer and then sell a preconditioned weaned calf that's really ready to go in terms of either a backgrounding yard or in a feedlot more accelerated system. But one of the things that often gets missed in the cow-calf enterprise is thinking about that seasonality of, when, if I'm doing exactly what everyone else is doing, is that really the best option for me from an economic standpoint?
Is early weaning a revenue generating proposition for a producer?
In my opinion, I think it could be, and I think that's a real interesting way you phrase that. Whether is that is it a cost cutting or a revenue generating? I think it could be a revenue generator. Maybe the first part of that discussion needs to be, well, do we want to retain ownership or not? And if the answer is no, well, then I don't know if early weaning is probably the right fit. Now we need to think about some other ways then to manage cow costs and all of these other things we talked about. If retaining ownership is a fit, there is a potential option. Now we have to think about how do we fit that into the system. Early weaning might fit into as a way to boost ranch revenue.
That's Warren Rusche of South Dakota State University talking with K-State's Jaymelynn Farney about early weaning beef calves. Take in the entire podcast by searching for Dr. J's Beef. We'll be back shortly on Agriculture Today. Agriculture Today continues now here on the K-State Radio Network. Eric Atkinson with you. And on we go now to today's agricultural news headlines, courtesy in part of DTN. And starting with the latest Kansas wheat harvest report from over the weekend put together by the good folks at Kansas Wheat. They spoke with numerous producers in various parts of the state, including Paul Pinner, who started cutting on Friday near Hillsboro in Marion County. He said that the harvest there will be comparable to average yields of 45 to 70 bushels per acre, the protein running around 10 to 11%, test weights as high as 63 pounds per bushel. He reports that a field of Bob Dole, that's that variety developed by K-State, released by AgriPro Syngenta, topped the range at 70 bushels per, with very good test weight. Dara Prescott, Farms near Ellenwood in Barton County started cutting last Wednesday, and this south of Cheyenne Bottoms. Wheat yields, she says there, coming in from around 40 to 55 bushels. Some of that area hit by a hailstorm in mid-May, causing significant damage in the affected areas. Dara saying yields are averaging in the 30 bushel range, and saying that an average wheat harvest is expected overall there this year. Randy Small, farming near Neodesha in Wilson County, reporting that a few individual fields in that area have tested for head scab and vomitoxin, but not at levels high enough for elevators to turn loads away. He reports yields are averaging 50 to 60 bushels per acre. Test weights are steady at 60-61 pounds. And one variety, Zenda, the Kansas Wheat Alliance variety, has been a particular standout there, he says, running around 60 bushels per acre. Those are notes from the latest report on the Kansas wheat harvest from Kansas Wheat. We plan on beginning our annual series of wheat harvest reports from county and district extension agricultural agents later on this week here on Agriculture Today. The Iowa Supreme Court on Friday stopped a lawsuit brought by environmental groups in that state addressing runoff from crop fields and hog operations. The 4-3 decision handed a significant defeat to environmental groups who were advocating that Iowa should scrap its voluntary farm runoff management policy and order new mandatory limits on nitrogen and phosphorus and stopping construction of new hog buildings. The lawsuit, which was brought by the Iowa Citizens for Community Improvement and Food and Water Watch, contended that unregulated farm pollution is violating the rights of citizens to clean water in the Raccoon River Basin for recreational and drinking water use. 4 of the court's justices said the environmental groups did not show that the state's actions had caused a concrete injury that the courts could fix. They also said that the issues at the heart of the case were political questions that would fall to the legislature there to settle. Justice Edward Mansfield wrote for the majority, saying that the Des Moines Water Works would have had a better standing to sue, but he pointed out that utility already did so and lost a 2017 federal court case that was also dismissed. The USDA is expecting more dairy cows and then therefore more milk production and more demand from and for dairy products. More on that from the USDA's Rod Bain.
One trend continuing in USDA's latest outlook for dairy:
continued growth in dairy production.
With World Agricultural Outlook Board Chair Mark Jekadowski noting a rise in dairy production for this year and next due to increasing cow numbers. Export demand for dairy in both fat basis and skim solid categories was also adjusted up. Translation regarding prices by category and class: while cheese prices were lowered for this year due to larger stocks,
we increased our butter price forecast by a penny a pound for both 2021 and 2022. We raised our price forecasts for both non-fat dry milk and dry whey in both 2021 and 2022.
Meanwhile, class price adjustments included a lowering of Class 3 and all milk price forecasts for this year. However, all classes of milk are expected to see higher prices in 2022. I'm Rod Bain reporting for the U.S. Department of Agriculture in Washington, D.C.
This word from the Animal Sciences and Industry Department here at K-State: the entry deadlines for the state youth livestock shows are fast approaching. Exhibitors need to remember that a complete nomination does not constitute entry. It's only the first step in animals being eligible for the State Fair Show and the Kansas Junior Livestock Show. Now, entries for the Kansas State Fair Grand Drive 4-H FFA Youth Livestock Show are due July the 15th. Those are being accepted now through the website. All animals must be entered directly through the State Fair using the online system called ShowWorks. Only online entries will be accepted. Late entry forms will be accepted until July the 25th, but with a late fee. Those are conducted through the website kansasstatefair.com, and follow the links to the appropriate page there. Now, entries for the Kansas Junior Livestock Show are due on August the 15th, also using ShowWorks. However, they're separate shows, so families will need to create a new account when entering the Kansas Junior Livestock Show. Again, all exhibitors must register online using the link found on the KJLS website. That's at kjls.org. And families in both cases are encouraged to enter early to avoid missing deadlines or experiencing other difficulties. Again, for the Kansas State Fair Grand Drive, go to kansasstatefair.com, and for the Kansas Junior Livestock Show, kjls.org. Also, the 2021 Kansas 4-H Livestock Sweepstakes is now scheduled. It'll be held August the 21st and 22nd here on the Kansas State University campus in Manhattan. The sweepstakes event includes the State 4-H Livestock Judging Contest, the Meat Judging Contest, the Livestock Skillathon, and Livestock Quiz Bowl. They have been approved to host the event in person here on campus. To remind, rules and information will be soon released. The deadline to enter will be August the 1st. All entries must be made by going through your local extension unit using CVent. For more information, you can contact Lexi Hayes here at K-State, adhayes@ksu.edu, or call her at 785-532-1264, 785-532-1264. So again, a number of events and deadlines to keep well in mind for youth and their parents. Take care of that business by checking in with those respective contacts shared there. You are listening to Agriculture Today, and appropriately enough, next up for you is this week's Kansas 4-H segment. Jeff Wichman standing by with that. You're tuned to the K-State Radio Network.
This is Agriculture Today. Along with Eric Atkinson, I'm Jeff Wichman. Kansas 4-H youth development agents in northwest Kansas are utilizing grant funds to hold day camps for 4-H and non-4-H youth. Northeast Area 4-H Specialist Diane Mack and 4-H youth development agents Robyn, Trussel, and Patsy Maddy are here to explain how the day camps are helping youth learn a variety of lifetime skills. Diane, first off, maybe just some background on the Dane G. Hansen Foundation and how 4-H got involved.
Yes, so the Dane G. Hansen Foundation was established as a charitable organization in '65 with the primary goal of making communities of Northwest Kansas better places to live. So it was established through a generous estate donation from Dane G. Hansen. And basically the foundation awards grants and scholarships every year to recipients in Northwest Kansas to talk about and build community improvement. And so 4-H has been a partner with this since 1967 and has received grants, and we've been focusing on providing day camps for all youth in the Northwest area.
And really 4-H just a logical choice for this type of a grant.
And it is because, 4-H is about improving communities and helping young people connect to their communities and be a part of that. And so I just wanted to say, too, that their coverage is 26 counties within the Northwest area.
And a couple of those agents who work in Northwest Kansas also joining us, and maybe just some background on how you've been able to use those grants. Let's start with you, Robyn.
I've been with the Extension program in Northwest Kansas for just over 20 years, and so I have been able to utilize this grant process through our Northwest 4-H Advisory to help put day camps on each summer and winter in our 3 counties. And it focuses on a lot of things that we deal with the 4-H, helping the kids learn about careers, helping the kids learn about life skills. Even in the pandemic, we were able to utilize these grants to do virtual day camps with the kids. We focus on a lot of our STEM and our livestock projects, and we're able to do some things with them even through COVID. So it's broadened our spectrum a lot by being able to offer day camp activities for kids of all ages and all youth, not just our 4-H kids.
And it's nice that you're able to do this twice a year.
Yeah, we started out just doing summer day camps, and probably 10 years ago we added the winter day camps in there. And so we've been able to focus on both winter and summer. Obviously, we've got out of school time both times of year. So being able to help us out with some of the financials through this grant has helped tremendously. It also gives us that opportunity to reach out to our local businesses and organizations and partner up with them, depending on what our subject matter is. Again, just offering those opportunities for kids to learn and grow through the 4-H program.
Patsy, what are some of the things that you've been able to do with the grant money?
We have been able to provide educational day camps. A lot of times we focus on our project areas, but these day camps are open to all youth, not just 4-H youth. And the reason is that we want to promote our 4-H program to all of the youth in our counties, to increase our membership and build our program, and also to promote Dane G. Hansen for all the good work that they do. We have a wide variety of topics that we do for day camps. This year kind of is a STEM focus, science, technology, engineering, mathematics, etc. So we try to incorporate that with all of the day camps that we're doing. It can be anywhere from cookie decorating to robotics to ag education. The one that one of my counties is planning right now, it's more of an Olympics type thing, but they're incorporating all the different project areas in an Olympic theme just to give those kids some experience in all the different project areas that they can learn in 4-H. We like to promote this program, so there's a lot of promotional activities, and they go home with brochures that says, join 4-H. It's also an educational, so we try to incorporate not fun, but also education with the fun aspect. It gives our older 4-H members an opportunity to be leaders. We allow those older members to take that leadership opportunity and just run with it with the guidance of our volunteers, our adult club leaders, and extension staff as well. The Dane G. Hansen grants have been able to provide that incentive that helps us out financially, like Robyn said earlier. But not only that, we're held accountable. So we report back to Dane G. Hansen. It's kind of an intensive report form back. So we request pictures, what was your educational objective, all the different things that are included in that report. How many youth did you reach? Were they first-time members? Were they 4-H members? Were they non-4-H members? They're wanting to see what we are actually doing with those funds that they grant us, as well as the KSRE, Kansas State Research and Extension impact. So we report back to them as well so they can see that us as agents and our volunteers and our 4-H members are doing our job as far as reaching underserved audiences, reaching just the local youth in the community. And then I guess on top of that, not just local counties and districts doing program activities and day camps for our youth. As our Northwest 4-H Advisory, we also incorporate an adult kind of professional development as well as older youth development. So this fall, we have Michelle Cummings coming back to our Northwest area to do a 2-day training. Pretty proud of this gal. She was a former Norton County 4-H member who has just made it really big in her team building activities. She is based out of Colorado right now. But then we also try to do some leadership activities for our older youth as well. So it includes both adults and youth.
If someone wants more information, how can they get that information?
They would go to their website and check that out. Basically, again, the Northwest area, they would go to their local extension office's website and be able to see those different camps that are offered throughout the summer. And as Robyn said, we do basically year-long processes. And so again, with this main focus, building up the community in Northwest Kansas, this partnership with Extension, volunteers, with older 4-H members who are gaining those leadership skills, and then reaching those young people to build the skills that they'll use throughout the life. We also utilize a lot of social media to get the word out. Facebook is probably primarily what we utilize. I know some counties and districts use Instagram. Even the old-time flyers, we stick flyers up at grocery stores and libraries, et cetera, to get the word out because everyone isn't on social media. But it's just a good promotional event. Here we have a radio station that's always willing to broadcast that information as well.
A great program, and you're getting great response to it, so it's obviously a need in those communities.
Definitely. It is working, and they see the value in it. They see the value in reaching those youth in our community and giving them some opportunities that they may not have been able to have.
That's Patsy Maddy, the 4-H Youth Development Agent in the Twin Creeks District. She was joined by 4-H Youth Development Agent for the Walnut Creek District, Robyn Trussel, and Northeast Area 4-H Specialist, Diane Mack. To learn more about 4-H, visit kansas4h.org. And that'll do it for this edition of Agriculture Today. Along with Eric Atkinson, I'm Jeff Wichman. This is the K-State Radio Network.